Welcome to the SBI Securities weekly market podcast with me Sudeep Shah. Today we would be discussing about what to expect in Nifty and Bank Nifty from here on, and along with that key levels for both the indices. We will also be discussing on key sectors and stocks that could make a move from here on. Now last week we have seen Nifty correcting over 2.5% on account of hawkish Fed policy, Brent crude prices sustaining above $94 a barrel, and along with that dollar index also sustaining at higher levels of 105. Now, last week we saw large caps correcting. We saw Reliance, HDFC Bank, and ICICI Bank also witnessing a slide. And HDFC Bank and ICICI Bank itself led the Bank Nifty to close 3.5% negative for the week. On the other hand, Nifty Mid Cap Index corrected by over 1.5% and Small Cap Index corrected by 2.5% for the week. Sector-wise, CPSE as well as PSU Bank Index ended the week on a positive note, outperforming the Nifty, while banking index, financial services, manufacturing, metals, pharma, and realty closed 3 to 4% negative, underperforming the index. Now, JP Morgan Chase on Friday has included India in its global bond index, which is a big positive, and it was a much awaited piece of news. And in a bull market, such reasons could easily be leading a big rally on the upside. But since the trend is weak and selling pressure is witnessed in the past few sessions, even this piece of good news had little impact and index saw selling pressure in the second half after an initial burst of positive momentum in the initial few hours on Friday post the announcement. Now, the major reason for this is the macroeconomic setup, which is not favorable, and this could really act as a resistance going forward for the markets. Now, generally, a question will arise how to approach the such corrections, and like we've mentioned in the past few sessions, firstly, we should be avoiding over leverage positions. Secondly, hedge wherever possible. Thirdly, the preference should clearly be on large caps over mid and small caps, and even in case someone wants to dabble on mid caps, then just look on for quality names. And for the week, I feel that the apt strategy would not be to chase the stocks at higher levels. It would be to be choosy, wait for dips, add your favorite stock on those dips, and only those stocks that are kind of outperforming the market. Now, coming to Nifty, index has closed below 19,770, which was its 20-day exponential moving average on daily charts, and the trend is increasingly weakening since the past few sessions. Along with this, 19,850, 19,870 zone also would act as a key hurdle because there's a pending gap in that zone which could really act as a resistance on the way up. So only if Nifty is able to cross these hurdles at 19,770 followed by 19,870, then it could really start making a fresh move up to 20,150, 20,200 on the upside. So all in all, 19,770 followed by 19,870 zone could act as an important hurdle. uh, Key support zone would now be around 19,480 to 19,530. Now this was the same zone where in the entire month of August, uh, every time Nifty was rebounding from 19,200 to 50 zone, it was witnessing some kind of a resistance at this 19,480, 19,530 zone. So the old resistance has now turned as an important support, and index is approaching that zone now. So I feel that the buying support could be witnessed around this zone, and in case of the global markets getting more weaker or the fall getting more uglier and 19,480 is taken out, then the next support levels which the indices could revisit could be around 19,300, 19,320 on the downside. If we observe the weekly option chain, highest call writing is visible in 19,800 and 20,000 strike price, which implies a resistance of 19,850 followed by 20,000 kind of levels on the upside. While put writing is visible in 19,700, 19,600 as well as 19,500 strikes, which implies that the support zone is around 19,500 followed by 19,300, 320 on the downside. Now, coming to bank nifty, key support zone for the banking index is around 43,900, 44,000. Now this is the same zone from where multiple times in the month of August the indices have taken support and started its journey towards 46,300. On the upside, key hurdles would be around 44,950, 45,000 and 50 zone, where the 20-day exponential moving average is placed. And remember, even day post the news of India's inclusion in the JP Morgan bond index, Bank Nifty had rallied in the first half, and thereafter it witnessed selling pressure, and it exactly witnessed selling pressure from 45,000 levels on the upside. So sustaining above 45,100, we feel that the index could witness a short covering move up to 45,500, but for that 45,100 has to be taken out. Significant open interest built up is witnessed in 44,500 puts as well as 45,000 calls, which implies a trading range of 44,200 on the downside and 45,100 on the upside. Now, PSU Bank Index, which has hit a fresh lifetime high, could continue its positive momentum for the next few days, with top picks being PNB, Union Bank, Canara Bank, as well as Bank of Baroda, where a significant long built up is witnessed in the previous week, along with the chart structures also being extremely positive. If we observe the FII data, FIIs have been net sellers in the cash segment to the tune of 1326 crores, while DIIs have supported the markets as they've turned buyers again to the tune of 800 crores on the cash side. FII's long short ratio for index futures has dipped to 53%. Now remember, this ratio was 65% in the past week, and this dip to 53% is kind of negative from an index futures perspective. FIIs have sold index futures to the tune of 10,473 contracts. They've bought stock futures closer to 10,254 contracts. On the option front, FIIs have sold 72,371 contracts of index calls, while they've sold 40,667 contracts of index puts. Going into the expiry week, looking at the overall FII data in the derivative segment from the last few sessions, we feel it's kind of negative and seems like a scenario where the FIIs are booking their partial long positions at higher levels. Now let's discuss where there could be some interesting opportunities in terms of stocks and sector specific moves. And while doing so, we should be aiming and choosing sectors that are outperforming Nifty and choosing stocks that are outperforming their own sectorial indices. Now, along with PSU bank names that we have already discussed earlier in the podcast, we continue to remain bullish on the IT sector, which has now recovered more than 50% of the entire fall from the previous all-time high of 39,400 of January 2022. And names such as Infosys, TCS, Tech Mahindra, which have seen a decent long open interest built up in futures, are looking extremely positive on the multi-time frame charts, also daily, weekly and monthly setups. Even the CPSE stocks such as REC, PFC, Power Grid, Coal India have been displaying higher relative strength in the past few sessions, and we feel going forward in the next week also the momentum could be positive in these names. With dollar index currently trading at elevated levels of 105 and above, we feel one needs to be a bit cautious with respect to over leveraged positions in metals. Now remember, dollar index and the metal index as well as the commodity stocks are inversely correlated. So when the dollar index continues to move up, one has to adopt a cautious approach when it comes to the metal stocks and the commodities in general. Now, just to summarize, we feel that the indices could witness buying support on dips around key support levels, which is around 19,480, 19,500, 530 on the downside. Whereas resistance, the first resistance is placed around 19,770, followed by 19,850 on the upside. While for Bank Nifty, the key support zone is 43,900 to 44,000 on the downside, and the resistance zone is 45,000 to 45,100 on the upside. We feel large caps should still be preferred over mid caps and small caps for the next few weeks from here on, till the time we don't see the macroeconomics improving on the better side. That's all for today. We hope you have enjoyed listening to the podcast and are finding it useful for your trading decisions. Kindly do subscribe to the channel for such updates and interesting insights, and also do share it with your friends and relatives. So until we meet next week again, happy trading, stay safe, and thank you all for listening to the podcast once again.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.